Welcome back to Wilson Weekly. I am Rachel Howlett, your money mentor. This is where the auction markets are peaking, house prices are rising, and Doc is armed with more charts than a Year 12 maths exam. And yes, spring selling season might have finished, but the data is still hotter than a Brisbane growth chart, which, by the way, is sitting at a casual 31.5% over 2 years. No big deal.
Wow.
I'm joined, of course, by Dr. Andrew Wilson. This week, we're bringing you the know in home prices, building approvals and auction numbers, but also I want to touch on something that we should be watching very closely. The new Help to Buy scheme launching on the 5th of December, so tomorrow. This is essentially a shared equity scheme where buyers can go into a home purchase with as little as a 2% deposit, and the government will contribute up to 30 to 40%, depending on the property type. This bridges the gap between how much you can borrow plus the purchase price of your property. In return, the government holds the same percentage of equity in the property and proportionally will share in the gains. Over 4 years, the government hopes to help 40,000 people under this scheme. Doc, I think it's important we talk about this. How do you see this Help to Buy scheme affecting the broader Australian market? I mean, could we see a boost in demand at the entry level, or will the impact be more muted because of the price caps and availability? I mean, the price caps are still decent, the Queensland one being $1 million, for example.
Yeah. Look, very interesting, Rachel. It's obvious that the government's attacking the problems we have in the housing market, which, as we, every week we say the same thing: too many people, not enough houses, higher prices, higher rents. So what's our solution? Let's have more people. And as we'll see later in the podcast today, with the latest building approval data, we're actually getting fewer houses. So more people, fewer houses. How does that help? Too many people, not enough houses. Well, it really doesn't, but it is good news for those that take advantage of the scheme. I'm not going into the nitty-gritty of the pros and cons of this, Rachel, but it does mean basically it's just an extension of public housing, that instead of the government building houses and sort of giving them or renting them to those that are marginalised in the housing market, it's buying them in conjunction with those that certainly have some capacity to enter into the market. But the problem is you are sharing your property. You share the gains, which is always very important in Australia's housing markets, because we have consistently high gains, as we've seen this year, and we'll see the latest home price data for November is quite spectacular again. So you share the gains, but if there are any losses, you're also sharing them. But we should be, focusing on the gains for a start, because that's the most likely outcome. But it does mean that
you're the more likely outcome.
Well, but it does mean that you're, not just that you're sharing the gains, but you're also beholden to your the government who has lent you the money to get into the market. And these schemes aren't new. We've had state governments, particularly the Victorian governments, had some success with this particular type of scheme, shared equity. But that's been through a period of not just positive housing market outcomes, but also positive economic outcomes. I mean, the issue for the government happened because there is some scrutiny here. The government just sort of says, well, here you go, here's your big bag of money, and buy your house, see you later on. Let us know when you sell it or when you can pay back some. But there has to be some scrutiny from the government overlooking your personal circumstances. And, that can be sort of onerous. And as I said, we've had positive economic conditions really in the post-COVID period. And Australia, by and large, is a strong economy. But there is a business cycle. It's called a cycle because it rises and falls. We've had some early signs of perhaps a little bit of an easing in the business cycle with slightly higher unemployment rates. The issue is what happens then if, some of the beneficiaries of this scheme start to have problems with, their jobs and their incomes, etc. And then it becomes problematic. But I think this is a get out of jail card played by the government. It has also, of course, the first home buyers scheme as well. So it's about saying, well, let's keep people happy by getting them into the market, even though they've got to pay higher prices. And as you mentioned, there are some quite interesting cutoffs. You mentioned the Brisbane cutoff at $1 million. That's the ceiling. Just a couple of years ago, or even 1 year ago, that would have been, would have thought, well, that's crazy. $1 million ceiling for a public housing scheme. in the Brisbane market. But Brisbane's now, the median in Brisbane, as we'll see with the data shortly, is now pushing up towards $1.2 million.
Yeah.
And it's overtaken Melbourne, and it's heading towards Sydney, although there's some way to go before it reaches Sydney. And the other point is, I'm not sure if you're looking to buy, and there's a better deal if you buy a new house versus an established home, whether you can actually get a new home for under $1 million.
Exactly.
Because they're very expensive now, and we're, as we'll also see with building approval data, that's not heading in the right direction either. So look, really good news, bringing more people into the housing market, but you must be very careful because you are now in a partnership with someone who has the whip hand in terms of their equity in the project, and it's a great thing if you can, as I would always advise, build your equity up. That is, pay off your partner, the government, as quickly as you can, and then get all the benefits from being a home owner. And as we see, there's plenty of those currently for sure. But yeah, look, as I said, Rachel, is it just a Band-Aid? I'm not sure it's any sort of a long-term solution, but, governments are about politics at the end of the day. And I suppose this is positive politics because it's going to make a lot of people very happy.
Yeah, well, I suppose it depends on what side of the fence you're looking on. That's for sure. So it's definitely something I think we'll be keeping our eyes on, and how this may impact the property market. But I thought that would be interesting because it was a lot of talk for a while, and now very suddenly they said it's being launched on the 5th of December. So we record this. Yeah. We're recording this on the 4th, so it is tomorrow for us. But how about we get stuck into the November home prices now?
Yeah, which is relevant because it does show us just how strong our housing markets are and what a challenge it is, of course, to get into the housing market with such strong growth that we've had over the past year. Well, really, over the past 3 years. But let's have a look at the latest data for November as it comes through. Here we go. And of course, it's brought to you by My Housing Market, which brings you every week with Infinity, the latest in the housing market, myself in conjunction with Rachel Howlett. And it is all about the current state and future prospects of your housing market. And this week we're going to, which is the first week in December. Wow, the year's gone, Rachel. See you later. Welcome to 2026, I guess. But the week ending Wednesday, December the 3rd, we're going to look at November home prices, as we've discussed, also the October building approvals and the latest weekly auction results, with just 2 weeks left till the end of the auction season. So latest home prices, no surprise, more strong growth over November. All capital cities recorded higher house prices over the month. And again, it was Adelaide and Brisbane leading the charge with the monthly growth in house prices, and Melbourne continuing to revive with another solid result. So with the national weighted average house price up for the 9th consecutive month. Of course, what we do here, Rachel, is measure the 3 months. So it's a quarter of house prices, 3 months of house prices. That gives us a nice solid basis for our model, but we transfer it month to month, so it's a rolling quarterly average median house price, and it is all about the weighted average. So it does favour obviously the bigger capital cities because the weighting average that is based on the number of sales in each of the capitals, and of course Brisbane, Sydney and Melbourne lead that. So up again over November, nine months in a row of the advance of the quarterly series. So let's have a look at some of the results. Perth up by 2.7%, top performer. Hobart up by 2.6%. Melbourne, 1% increase. That's its strongest result for some time, 1% increase over the month. So far this year, Melbourne is up by 7.7% and up by 7% over the full year. And that's way ahead of where it's been for the last 2 or 3 years, Rachel. So some good news there in the Melbourne market, but Brisbane keeps on keeping on. It's up by 13.6% this year so far, 13.7% over the full year, and a massive 31.5% over the past 2 years. But Perth's over the past 2 years up by 40.7%. These are really big numbers, Rachel. Yeah. I mean, if you're a homeowner, you're thinking, wow. We will later, not today, but in another show, show the actual dollar value of the increase in house prices over the past 12 months. We'll do that for our end of the year show, I think, just to show how much money you've banked as a homeowner over the year in terms of real dollars other than percentages. So some very strong results. Darwin's one that's a standout in terms of the smaller capitals. This year, Darwin market is up by 24.6%, which is clearly the best result of all the capital cities, and 18.9% over the past full year, but only 18.2% over the past 2 years. But that does show you that Darwin market has been treading water for a couple of years. So it was sort of due for a boom, but it certainly is booming at the moment. And once again, we can see with the adjusted medians there, Brisbane, as we were discussing, now has a median price over the month. The quarterly November median price is at $1.14 million, tracking ahead of Melbourne. Tracking ahead of Melbourne, with Adelaide also on the rise, and Perth now ahead of Adelaide going forward. So Perth's really gathering some momentum. We've seen some recent indications over the past week or so just how much energy that Perth market is gaining. So good news for homeowners or house owners generally, Rachel, with everybody recording a result over the month. And the underperformer there is the Canberra market, still up by 5.1% over the year. Let's look at units now. Units actually 10 consecutive months higher unit prices, Rachel. So again, that's been and this is the weighted average capital city unit result. Unit owners aren't missing out on the drive that we've had from those interest rate cuts earlier in the year. Our top performer again was Hobart, up by 2.3%, and Darwin up by 7.5%. But they are smaller unit markets, Rachel, so they tend to be more volatile from period to period. But gee whiz, are we sick of discussing that Brisbane housing market? Look at that, 2.1% over the month. Clearly the best result of the major capitals. Up by 17.9% this year so far, and up by 21.1% over the year. And over the past 2 years, Rachel, Brisbane unit prices have increased by 52.3%. It's almost Groundhog Day here with what we discuss with Brisbane when we do get the latest price results, that it just continues to accelerate and is a real standout performer. And like we also say when we see the Brisbane unit prices, it wasn't so long ago that those in the so-called know were telling us that the Brisbane unit market was saturated and oversupplied, and that prices would plunge over a number of years. But they've gone in the complete opposite direction. That's a fabulous result. 52.3%, Rachel, over the past 2 years. And of course, most of Southeast Queensland, in fact, most of Queensland is enjoying those types of growth numbers. So good news in the Sunshine State. And again, with Melbourne, it's interesting, Rachel, up by 0.8% over the month. So far this year, Melbourne units up by 9.2%. That's a very positive result. Haven't seen that in Melbourne for a while, as it's been flat. And when we do look over the past 2 years, just 5.1%. That shows you that was basically flat growth for a couple of years, but now revived. The Melbourne market. And look at Melbourne versus Sydney. Again, higher price growth in Melbourne over the month versus Sydney. And Melbourne up 9.2% so far this year, and Sydney only 5.5%. So I guess a surprise outcome given the consistent strength of the Sydney market, and just reflects the fact of how strong Melbourne is performing, on certainly how it's revived going forward, particularly in the unit market, Rachel. And I think that given that Melbourne units, when we look at the median there of 600,000, it's still below Brisbane and Adelaide, and just a little higher than Perth. And I think given these government policies, particularly pushing towards the more affordable end of the market, that will only push those Melbourne unit prices higher. So I think that's a positive drive for the Melbourne unit market going, which is already obviously rebounding. So with more buyers taking advantage of the government policies, I think those prices will only go higher. If you want to see a full copy of the My Housing Market November House and Unit Price Report, there is a QR code. get your phone out, take a picture of it, and it will give you a link to a PDF copy of the latest report. So lots of good news on the demand side, Rachel, but not so good news again for home building approvals. They fell after a rise last month, but we've now had 3 falls in the past 4 months, and really not doing much for the trend. So down by 6.8% over October versus that September rise. Again, it's because we don't get the bounce from the previous month when we do get a rise from units, because units tend to have large developments coming through 1 month and then not so large the next month. So it's up and down like a yo-yo. Units were down 13.1%, but houses, this is the real issue, were down by 2.1%. Western Australia was top performer. Total homes up by 28.1%, again reflecting a big unit development that went into Perth over the month. But we could still say, realistically, that growth levels remain depressed over the longer term, and the quarterly trend rising a little bit, but giving signs of flattening out. And of course, 3 falls in 4 months will do that to the trend. So these are the numbers. Overall units down by 13.1%, houses down 2.1%, overall fall of 6.8%. Units have been the big mover this year, Rachel, up by 34.7% over the first 10 months of this year compared to the same period last year. Houses just up 1.8%, gee whiz. And over the full year, units up 31.8%. So lots of units in the gun, ready to become completions if the builders can afford to build them. But that's going to take some time to readjust or certainly provide more housing on the ground for that surge in demand that we're witnessing right now. There's the trend, has been rising, just starting to ease a little bit. This is the national building approval data trend over the quarters. And you can see there that compared to the previous month of October last year, there's actually fewer total homes being built. So that's not good news if we're not, and I'll speak to that in a moment, if we're not at least matching what we did a year ago. And you can see there that it's houses that are flat, a little bit higher than a year ago, but units were down compared to where they were a year ago on the national trend. Let's have a look what's happening on a capital city basis. As usual, Melbourne, the top performer. Neck and neck, Sydney and Melbourne in terms of unit approvals. And look, the other capitals have also surged in terms of building approvals for units. But big numbers of there. The governments of New South Wales and Victoria particularly have accelerated the building approval process and the planning approval process for units, obviously concerned about undersupply. And that's something they can sort of do positive, have positive steps towards improving in terms of accelerating planning approvals, particularly in established suburbs. So Melbourne still leads, but Sydney now back on top in terms of unit approvals. Now, this is the concerning when we look at the breakdown in property types in terms of outcomes over the past year. You can see there the black are units, so big rise in units there. Melbourne just falling down a little bit, but Sydney, as I said, now approving more units than any of the other capitals. And Adelaide and Perth, which have smaller unit markets coming from a smaller base, but certainly accelerating their approvals for units. But what's a concern here, Rachel, is the actual building approvals. This is to the year to date, so it's the first 10 months of this year versus the same period last year, are actually lower in Melbourne and Brisbane. So Melbourne is now approving fewer houses for building over the first 10 months of this year compared to the same period last year. And Brisbane, which we're getting tired of saying how strong that Brisbane market is giving less opportunities for those looking for a house in terms of new houses coming through. So 3.5% fall, but a 36.4% increase in the unit market. So, not looking good there. This is the long-term trend there. This is annual building approvals on a month-to-month basis. Still well down, 26.4% lower than our peak in 2016, and hence the undersupply scenario. And when we look at units versus houses in that long-term trend, units are still down 42.3%. since that 2016 peak. And we can see their houses just really flatlining now, even though we've seen a strong uptick in units in the trend, which of course reflects those big numbers that we were discussing previously. It's still well below the previous peaks. And before we go to the auction results, Rachel, I just wanted to mention something which we might have forgotten in terms of, we did discuss to start with government policies. Now, if you remember back around about 18 months ago, the government, recognising our problems with supply, put forward their projections, their forecast, perhaps, whatever they want to call it, for building. So they forecast that Australia would build 1.2 million homes over the 5 years ending or starting with the 2025 financial year. So that's 2025 to 31. So how are we going? Because we've got the latest data now on completions. So that's completions. We're looking at building approvals at the moment. So how many did we complete in the first of those 5 years? We're recognising that if we divide 1.2 million by 5, we get, quickly, Rachel, no, I know, I won't put you on the spot. We get 240,000 homes per year. So that's what we've got to do. So how did we go in the first year, Rachel? Well, I'll tell you, 170,000 approvals in the first financial year. That's like 40% lower. So we've got to find not only our next financial year our 240,000, we've got to add another 70,000 just to, keep up with the target. So,
but hang on, our approvals are declining.
That's right, and they're declining.
Constraints, right? What are they doing to alleviate that issue when we already know we're behind?
Well, that's right. Well, they can't really do anything. I mean, they can. If we look at solutions, the solutions aren't just give more people, homes, because that's not going to be a solution. That's just adding to the problem, surely. But I think they've got to look at their migration patterns in terms of skilled migration. What we've seen recently, which is just as a bigger problem, is we're seeing building prices, home building prices, house building prices are now starting to rise again. And even the ABS is admitting that then in their data that house building costs are rising again. So, we've got to at least, what does that do? If you've got a building approval and then you're saying, holy cow, look how much it's going to cost me to build this development. It only makes it either take longer or if you can do it, it only makes it more expensive to buy that new property. And therefore everybody's gravitating towards established properties, right? And that's the point, as we said, if the cutoff for Brisbane's $1 million, you're not going to get much for a new home in Brisbane for $1 million now. You'd be looking more for an established home, perhaps. But as I said, I think that part of the solutions to that, and it's a problem, there's no easy solutions, is to at least find some downward pressure, put some downward pressure on house building costs. And is this because we've got a shortage of tradespeople? Do we need to look more carefully at our training of our apprenticeship policies, at our intake, our skilled migrant intake, in terms of bringing more tradespeople in? But there's some very strong political headwaters to do that, particularly with a Labor government, Rachel. But as I said, you've got to start really pushing the envelope for solutions here, or is it just going to get worse with prices getting higher? And let's understand it's great for to be bringing more first home buyers and more or home buyers into the market because they are confronted with higher prices because of that underlying undersupply scenario and lower rates pushing up prices. But this is the taxpayers paying for this, Rachel.
Exactly.
We're all paying for this, Rachel. At the first scheme we discussed today, that's going to cost some billions of dollars, to initiate. Now, okay, it's probably cheaper than actually building the homes, but at the end of the day,
40% towards a new build.
That's right.
40%.
40%, and 10,000 of them, every year are being offered these places, and that's a fair bit of a whack out of the consolidated revenue that we put in through our taxes. That's great, and let's look after those that are marginalised. But this is a very costly exercise in winning the approval of those wanting to get into the housing market. And at the end of the day, we haven't really seen that this is going to be effective. And if we do get a weakening in the business cycle, what sort of impacts it would have. And let's remember, it's not that long ago when the solution to the problem was the build to rent programs. Whatever happened to build to rent? Hello, echo. There's nobody there. And as I said, you've got to try something. But again, build to rent was something that would only work with heavy subsidies from the government, taxpayer driven outcomes, So it is a perplexing problem, but if you're a homeowner, enjoy the higher prices because they're certainly set to continue to go, Rachel. Okay, so let's have a look at the latest. We've had a really big discussion today. And let's look at something a bit lighter, the weekly auction results. So clearance rates steady. We had a surprising flood of auctions come into the market over the past week, Rachel, which was quite interesting because we typically see an easing as obviously the year ends, but we did see a flood, but clearance rates held reasonably steady despite those big auction numbers coming into the market. I'm not so sure this might be the last hurrah in terms of auction numbers, but nonetheless, Sydney 15-17 auctions over the week ending November 29th. That's a rise from 1,405. Melbourne also up by nearly 1,600 auctions in Melbourne. Big week in auctions, up from 1,308. Brisbane also up, Adelaide also up, and Canberra similar, but big numbers, just a little bit lower than the week before. But clearance rates still quite reasonable in terms of the previous week, 69.4, which is almost the same as the week before in Sydney. So similar in Melbourne, 69.7, slightly higher than the week before. Brisbane, just reflecting the strength that his Brisbane market, over 50%. Adelaide, the top performer again, 72%, and Canberra, 66%. So good results there. And as we can see when we compare to the same week last year, Rachel, every capital city is tracking higher, in most instances well ahead of where it was a year ago. And also higher in auction numbers in most of the capitals as well. So some good results, and we can see the trend there. The market peaked in September, October, and as usual, as more properties come into the market, we do see an easing of clearance rates, but they are certainly still well in favour of sellers. So it's still a seller's market, Rachel, going forward, and the same sort of trend in Melbourne and Sydney. Brisbane bucking the trend, actually starting to rise over November, just reflects the strength of the Brisbane market and the fact that it's not so locked into the spring selling season as the southern capitals are. Tends to be quite a lot of activity towards the end of the year and the beginning of the year in that Brisbane market. Adelaide, it also is pushed against the previous month with a higher clearance rate, but Canberra similar to Melbourne and Sydney. So if you're looking for the latest auction results, Rachel, the My Housing Market Capital City Snapshot available on my LinkedIn channel, Doc Andrew Wilson at LinkedIn, every Saturday night at 6 o'clock, and the full national report, which includes regional breakdowns for Sydney and Melbourne, which is very interesting when you can see how your region is performing in the capital city, and also the top 10 sales under the hammer for each of the capital cities over the week. And that's also interesting in terms of what the top end of town is paying in your capital city for property. And if you've missed that latest National Weekly Auction Market Report, there is a QR code. Take a scan of that and you'll get a PDF copy of the report. Just before we go to the biggest giveaway in property, which is the My Housing Market Infinity Suburb Data app, I just want to mention something, Rachel. I should have said this back when we were looking at the report, but did you know that October was actually the highest month on record for property sales on record? Yep. The highest month. So we sold more properties in October than we did in any other month ever. So just shows you how strong the market is. So good news for estate agents, I would suggest, who'll be counting all that lovely commission perhaps, but that's where all the higher prices come. So let's have a look at the My Housing Market Suburb Data app. Which is great for those looking. We talk about capital cities here mostly. So you're looking to find out what's happening in your suburb. or a suburb you're interested in, you get hold of this app. There is a QR code. You can scan that and it will give you a link to the app or the hot link up there. It is password protected, but the good folks at Infinity will advise you of how to get hold of a password, but it's certainly worth getting. Here's a snapshot. It is about asking prices in the market as of today. So what we do is we look at all the asking prices. We measure all the asking prices. That is what agents are asking for particular properties on a suburb basis. And you can filter it for price or rent. And here as a snapshot, a screenshot of the app. So we're filtering this for price. We can filter for the state capital city region or the outside capital city region. We're looking at New South Wales capital city region of Sydney. We're looking at Blacktown as a suburb. You can filter for house unit or townhouse. We're looking at houses, number of beds. Also, you can filter for, so 4-bedroom house in Blacktown currently has a median asking price. This tells you what the market's asking of $1,225,000, $1,225,000. That's not, so we're not just giving you the median, we give you the high and the low. So you know the boundaries in the marketplace. So it's good to understand what the market's currently asking for properties and the number of properties that are for sale. So 20, and we do exactly the same thing for rents. So if you're a tenant, landlord, or just interested in what the rental markets are offering at the moment, there's the same thing that we offer for purchasers. Also for investors, we look at return on investment, and this is gross yield. So this is the total yield, which looks at the aggregated rent. So that's the rent over a year divided into the current asking price. And that gives you the percentage return of your rental income as a gross yield. Of course, it doesn't take into consideration your own individual costs for your investment property, but it's the top 10 there. And we also provide the vacancy rate, the number of properties for rent, and the number of properties for sale in each of those suburbs. And if you click on the hot link there on those ranked suburbs, it will take you to a map of the particular suburb in case you don't know where it is. So it'll tell you where it is. Isn't that great? So next week we're going to look at November home rents, and just back on the which I should have mentioned on our Infinity My Housing Market app. We're going to have a nice upgrade for that next year, Rachel, which everybody's looking forward to, which will include the latest news. Yep. So like we do here, we will then start to have on the app all our latest news as well. So not just data, but also news. So next week, we're going to have the November home rents, the building costs, which we already mentioned are on the rise. Let's have a look at house building costs over October to see if that's continuing. And the latest weekly auction results, will we see another surge in auctions? And if we do, will we see clearance rates standing up? I think clearance rates will hold reasonably around where they've been. I'm not so sure we'll see as many auctions coming into the market because we're so now fixated on Christmas, Rachel. I can feel it in the air, right? So who cares about property? Well, we care about property because there's still a lot of activity going on as people want to conclude their purchases or complete their sales before the end of the year and a holiday time. Gee, I'm looking forward to a holiday. Are you looking forward to a holiday, Rachel?
Absolutely.
Okay. Well, on that happy note, if you want a copy of the presentation, there is, or this week's report, there is a QR code. You can scan that and it'll give you a PDF copy of what we've said today. So thanks very much, Rachel. Another week bites the dust. Yep. Make a song about that one. And we'll be back next week with more of the latest information. And of course, we'll also be discussing next week the Reserve Bank's decision on interest rates.
Yep.
Very exciting. Very interested to see what the commentary is on that, given the latest pronouncements. And I didn't know, well, I did know, but also there's discussion now that the Treasurer can actually override the Reserve Bank in terms of their decisions. And there's some thought that, is that independent? Okay. Yeah, there's a few there, but we'll talk about that as well. But we're out of time, so let's get going, and everybody can look forward to next week, because I am.
Yeah, wow. Well, the spring selling season has well and truly finished, and homes have had a solid growth again, with Melbourne continuing its post-breakup glow. Adelaide and Brisbane are big performers in the housing market right now. And as you said, Doc, we sound like a broken record when it comes to Brisbane and some of that data, but it is exciting for some. But that does wrap up another week of Wilson Weekly on the Money Mentor podcast. And as Doc said, we'll be back next week with home rents, house building costs, and more insights as we head into the end of the year and Christmas. As always, thank you, Doc, and thank you everyone for tuning in to the Money Mentor podcast. We'll see you next week.
See you, Rachel.